My first office building renovation ended up taking a whole year and cost twice as much to rehab. Yes, the market is tricky, but that is going to force us to learn new strategies and build new muscle. One important thing I can tell you guys, success requires patience. Delayed gratification goes a long way. It's that time of year when we look back on how we grew our business, what went right, what went wrong, and what we can do to improve things next year. Today, I'm going to walk you through how my strategy has changed and what I'm planning to do differently in 2023. Hey guys, I'm Leka Devatha and I have been an active real estate investor for almost a decade now and have done over 75 flips and own a rental portfolio right here in the greater Seattle area. You can connect with me on Instagram or LinkedIn and also go check out my website, rehabithomes.com. So what I'm most excited by in the current market is being pushed to structure deals creatively. Yes, the market is tricky, but that is going to force us to learn new strategies and build new muscle. If you're doing anything differently or structuring deals creatively, make sure to put them in the comments below. Also, be sure to like and subscribe to this channel for more amazing content. This time last year, I knew the one change I had to make to my business was to increase my passive cash flow and diversify my asset types. As you know, passive income is seldom passive in the beginning. It needs a good amount of active time investment, both to find deals that can be true burrs and then to rehab the property and then stabilize it. That is, get it rented and refinanced. I'm going to share with you the goals that I had set for myself last year. First, renovate and lease out my first office building, raise funds and close on my first syndication as a proof of concept so I could start buying larger assets, finish my out-of-state flip as a way to also introduce my brother into the world of real estate investing, and complete at least 3 flips locally for active income. Additionally, sell $3 to $5 million of retail real estate also for active income. Now, how did these pan out? Well, let's talk about the misses first. 2 of my flips, the one in-state and the one out-of-state, both encountered huge roadblocks, faulty contractors, permitting issues, and bad market timing for resale. My first office building renovation ended up taking a whole year and cost twice as much to rehab. Another huge miss for me was my goal of selling retail real estate. I wasn't able to hit my target, not even close. But that was because A, the market shifted, and B, my efforts were channeled towards other parts of my business. So I didn't have time to focus on selling retail real estate. Now, any kind of diversity can be overcome by steadfastly looking for solutions to problems. Today, my 2 stall flips are both near completion, look spectacular, and will be listed shortly. My office building is finally complete. So exciting, and released to market, and already we have 3 out of 7 units leased. How did I do this? By networking within the local markets, by using social media to ask questions I need answers to, finding investor-savvy architects to help with the permitting process and permitting issues I was having a solid lender partner. This is absolute key. You make progress by constantly putting one foot in front of the other, step by step. So let's talk about some of the highlights of this calendar year. First, I sold a completed flip earlier in the year for a $250K profit. This was one of the largest profits I walked away with and a strong testament to the work we do on our properties. I was able to close on my first syndication, a 12-unit apartment building right here in Seattle. I managed to raise all the money that I needed for it in under 4 days from 30 investors, and we have our first few units already ready to rent. One important thing I can tell you guys, success requires patience. Delayed gratification goes a long way. A lot of deals I have worked on in the past 2 years are now starting to produce great cash flow with minimal vacancy. This is a big win because these units are true burrs. The income is completely passive and the assets have also significantly appreciated. One example is a triplex that I rehabbed in 2019 with an all-in cost of $950K. It cash flows $3,500 a month and its current ARV is $1.7 million. So I have needed to make a few pivots to adjust to new market conditions. I've walked away from more deals in the last 6 months than ever before, but that's okay. Now is the time to really tighten your underwriting. For example, my hard costs, which include utilities, cost of capital, taxes, buying and selling costs, on a flip would average 15% of the after repair value. Today, that number is closer to 25%, because the days on market have gotten longer and the cost of material and labor has gone up significantly. That, coupled with a drop in housing prices, means that I need to buy deals at a super steep discount, and most sellers are not willing to sell at those prices yet. So just be patient and wait for the right deal that checks all of your boxes. What's next? Next year, I want to work on two things: making my existing portfolio more bulletproof. Now, what does that mean? I think there's a lot of potential to convert some of my units into midterm rentals to maximize their potential. I will also be adding more units to existing multifamily buildings I own, like converting a triplex into a fiveplex, taking larger units and dividing them just to increase the number of units. Second, I will be looking for steeply discounted properties that I can fix up and burr the right way. These will be easier to find now more than ever before because the market has changed, where people are cash heavy and experience poor, meaning they want to buy more turnkey properties rather than deal with high cost of labor, high material, and just take longer times to rehab properties. Whenever there's uncertainty or a perceived risk of any kind, such as an inflationary market and recession risks that we're dealing with right now, it is important to recognize your core competencies and stick to them. If you are a real estate broker, focus on that. If you are primarily a wholesaler, then channel all your efforts into that stream of income. In other words, remind yourself what your lane is and stick to it. For me, I have spent years rehabbing distressed properties, and that's what I'm going to focus on. So here's my rewind of the last year. Thank you for watching, and follow me on Instagram and LinkedIn. Also, be sure to like and subscribe to this channel to be the first to learn about new releases from BiggerPockets.